Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms, Chapter 4, Admission of a Partner. And in this video, we will study preparation of revaluation account, partners' capital accounts and balance sheet. So let us see some questions from the textbook. So question number 57 we will see. X, Y and Z are equal partners with capitals of rupees 15,000, rupees 17,500 and rupees 20,000 respectively. They agree to admit W into equal partnership upon payment in cash rupees 15,000 for 1/4 share of the goodwill and rupees 18,000 as his capital. Both sums to remain in the business. The liabilities of the old firm were rupees 30,000 and the assets apart from cash consists of motors rupees 12,000, furniture rupees 4,000, stock rupees 26,500 and debtors rupees 37,800. The motors and furniture were revalued at rupees 9,500 and rupees 3,800 respectively. Pass journal entries to give effect to the above arrangement and also show balance sheet of the new firm. Now in this question, the new partner W is bringing his portion of goodwill and capital, and motors and furnitures are revalued. So let us see the solution. Solution 57. In this, motor and furniture are revalued and their value is decreasing. So revaluation account will be debited. Revaluation account debited to motors and to furniture. We know that revaluation account is debited when assets are decreased and liabilities are increased. These both are assets and the value of it is decreasing. Motor is decreasing from 12,000 to 9,500. So there is a decrease of rupees 2,500. And furniture is decreasing from rupees 4,000 to 3,800. So it is decreasing by rupees 200. So 2,700 rupees is the loss. And this loss will be given to the partners in their profit sharing ratio, old partners. So X capital account debited, Y's capital account debited and Z's capital account debited to revaluation account. It's a loss, so capital accounts will be debited and reduced. So when we are preparing balance sheet, this amount has to be deducted from the capital balances. So it is how much? 900 each, because they are equal partners. Now W is coming and bringing cash. So cash account debited to new partner W's capital account and to premium for goodwill. Goodwill is the amount which the new partner brings to compensate the old partners for sacrificing their portion of profits in favor of the new partner. Here it is goodwill is 15,000 rupees and capital is 18,000 rupees. So 33,000 rupees is brought by new partner W. Now this premium for goodwill will be paid to the sacrificing partners. Premium for goodwill account debit and closed. With how much rupees? 15,000. and it is transferred to all the three old partners they have sacrificed. So the three partners are benefited equally because they have sacrificed equally. Their old ratio is 1:1:1, and after joining of new partner W, the ratio is still 1:1:1. So there is no change in the profit sharing ratio as it was before, so it is now. So their sacrificing ratio is same. Being premium to old partners in sacrificing ratio, which is 1:1:1. We have discussed this point in the previous videos at length, that in what circumstances the old ratio can be considered as sacrificing ratio. Fine. So this is one of the case in which the old ratio and the new ratio for the old partners are same, and therefore the old partners will be sacrificing in their old ratio to accommodate the new partner. So the old partners' capital balances have increased by the amount of premium they have received from W. So in the balance sheet, this amount will be added to the initial capital balances of the partners. So in the balance sheet, as given in the question, the liabilities of the old firm are the same. So creditors are 30,000 rupees, not changed, and it says that motors are of rupees 12,000. So motors were of rupees 12,000, but we have revalued it for rupees 9,500. So we will write it the revalued amount, and then furniture, the value has decreased by 200 rupees and it is 3,800 rupees, and stock is the same, 26,500 as given in the book. Debtors are also same. Debtors are rupees 37,800, and cash, we will find out what cash is, and let us see the liability side capitals. Capitals of partner X. Initial amount was rupees 15,000. Then there was a loss on revaluation 900 rupees, and premium for goodwill rupees 5,000. So this will be the new capital of partner X. 19,100. Similarly for Y, initial capital is 17,500 and 900 is loss on revaluation plus 5,000 is premium for goodwill. It is 21,600. Then for Z, initial capital is 20,000 minus loss on revaluation 900 plus premium for goodwill rupees 5,000. It is 24,100. And now W's capital is how much? Rupees 18,000. And the grand total is 1,12,800. On both the sides, it will be the same. So cash amount can be the balancing figure here. So you can easily find it out by subtracting all these amount from the grand total. And the amount is, it is 35,200, which comprises of three things: opening balance, W's capital, and premium for goodwill. We know that capital is of rupees 18,000, premium for goodwill is 15,000. So the balancing figure is the opening capital, which you can figure out very easily. So from 35,200, subtract these two amounts, you will get the opening capital balances. And this amount is rupees 2,200. So before W joined as a new partner, the cash balance with the firm was rupees 2,200. So this way the balance sheet is to be drafted. Now let us see question number 58. Following was the balance sheet of A and B who were sharing profits in the ratio of 2:1 as at 31st March 2023. So to the liability side, we have got partner A's capital 15,000 and B's capital 10,000 rupees. Sundry creditors rupees 32,950. To the asset side, we have building of rupees 25,000, plant and machinery of book value 17,500, stock rupees 10,000, debtors rupees 4,850, and cash in hand rupees 600. Grand total 57,950. Then they admit C into partnership on 1st April 2023 on the following terms. C was to bring rupees 7,500 as his capital and rupees 3,000 as goodwill for 1/4 share in the firm. The value of stock and plant and machinery were to be reduced by 5%. A provision for doubtful debts was to be created in respect of debtors rupees 375, and building was to be appreciated by 10%. Pass necessary journal entries to give effect to the arrangements, prepare profit and loss adjustment account, that is revaluation account, and partners capital accounts and balance sheet of the new firm. Now in this question, new partner C's portion of profit is given 1/4 and nothing is said about that how much has A and B sacrificed. It means A and B has sacrificed in their old profit sharing ratio. So for the treatment of premium of goodwill, 2:1 is the sacrificing ratio. Let us see the solution. Solution 58. First, we will pass journal entries related to revaluation account. And here in this question, in point B, stock and plant and machinery are reduced. So for that, revaluation account will be debited. So revaluation account debited to plant and machinery and to stock. We know that decrease in asset or increase in liability. For this reason, revaluation account is debited and they are reduced by 5%. Plant and machinery is of rupees 17,500 and 5% of which is plant and machinery is 875 and stock is 10% of 10,000 is rupees 500. At the same time, in point C, it is written that a provision for doubtful debts is to be created. So, to provision for doubtful debts. It is a liability and it is created on debtors and it is 375. Fine. So, with this total amount, revaluation account will be debited. 1750. Being assets reduced and liability increased. Now in point D, it says building is to be appreciated by 10%. So reverse of the first entry, in that building account will be debited to revaluation account, and amount of 25,000's 10% is 2,500. Being building revalued. Now see, revaluation account is credited with rupees 2,500 and debited with rupees 1,750. It means there is a credit balance of rupees 750, which is a profit on revaluation. So we will transfer this to partners capital account. Revaluation account debited 750 to old partners capital account. So to A's capital account and to B's capital account. 750 and their profit sharing ratio is 2:1. So 500 and 250. in old ratio, that is 2:1. Now let us make journal entries for admission of a partner, that is C. C is bringing his portion of capital and goodwill. So bank account debited to C's capital account and to premium for goodwill. 7,500 is the capital brought by C and rupees 3,000 is the premium. So total 10,500 is brought by C. Now we will transfer premium for goodwill to old partners in their sacrificing ratio. That is 2:1, so 2,000 and 1,000 being transferred in sacrificing ratio, which is 2:1. So these are the journal entries. Now let us prepare revaluation account. So in the revaluation account ledger, we will write decrease in asset or increase in liabilities to the debit side and increase in asset or decrease in liabilities to the credit side. So here plant and machinery are decreasing. So to plant and machinery, it is decreasing by 5%. So 17,500's 5% is rupees 875. And stock is also decreasing. 10,000's 5% is rupees 500. And there is an increase in liability. So to provision for doubtful debts. Doubtful debts, it is 5%. No, amount is given 375. And the value of building is increasing by 10%. So 25,000's 10% is 2,500. That's it. Grand total will be 2,500. And here the amount is, balancing figure is rupees 750, which is profit. So to profit on a revaluation, it will be given to the partners in their old profit sharing ratio. So to partner A and B, when we break this, 500 to first partner and 250 to the second partner. So this is how revaluation account is to be prepared. So partners capital account, first we will write opening balances of old partners, opening brought down, given in the balance sheet, it is 15,000 and 10,000. And now in the question, there is no general reserve or any amount which can be distributed in partners capital account. Straight we will come to revaluation accounts profit. So a revaluation account, with the amount of profit, the partners capital account will increase. Fine. And then the new partner is bringing his portion of capital. So by bank, new partner has brought rupees 7,500 as capital. And now premium for goodwill. Premium for goodwill brought by new partner C in their sacrificing ratio, that is 2:1. So it is how much? 2,000 and 1,000. Total 3,000. And what else? Nothing. Now we will close the box. So it is to the debit side. To balance close down. Credit balance we will get. So here C is 7,500. So also here also 7,500. Then B, it is 11,250. And C, it is 17,500. So this is how capital account is to be prepared. So now comes the balance sheet. In the balance sheet, first we will mention the capital of all the three partners, partner A, B and C. The closing balances of the capital account. It is 17,500, then 11,250 and then 7,500. Total of which is rupees 36,250. Then sundry creditors. No change in the value of sundry creditors. It is 32,950 as given in the balance sheet. We cannot eliminate it or increase or decrease the amount. As it is in the previous balance sheet, so it will be in the new. Then comes to the asset side, building. Building was 25,000 and it increased by 2,500. The total is 27,500. Then plant and machinery. Has reduced by 5% from 17,500. It has come down to 16,625. Then stock has also decreased by 5%. From 10,000 it has come down to rupees 9,500. Then debtors, sundry debtors are of rupees 4,850 and we have prepared provision for bad and doubtful debts of rupees 375. When you subtract in the outer column, we have to write 4,475. Then comes cash and bank, and there was 600 rupees opening balance plus capital brought by C. It is 7,500 plus premium for goodwill brought by new partner C. It is 3,000. Total of which, grand total of which is 11,100. Now the grand total of the balance sheet is 69,200 on both the sides. So this is how the balance sheet is to be prepared. I hope that you have watched the full video and have understood the concept very well. And I also believe that you have watched all the previous videos. Despite this, if you have any doubt related to this, please put it in the comment section. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for watching this video. Bye bye.